Hi, I'm Bobby Casey. I am the managing director for businessanywhere.io. And today we're going to be responding to several of your questions from our recent videos on our YouTube channel. So stay tuned.
MetalBeast99 says, register and pay taxes in the country you live in. These cheap countries will start cracking down on remote workers and digital nomads who make first world salaries but pay no local taxes.
Sure, I don't like to call them cheap countries. That sounds, to me, it sounds a bit demeaning to that other country. Different countries have different cost of livings based on their own economic system and what's going on there. But yeah, a lot of location independent entrepreneurs and digital nomads do move to lower cost of living places and operate their businesses while spending time in those jurisdictions. For example, Costa Rica. Costa Rica has a very clear tax system where they do not tax income you earn outside of the country. And that's a common location for digital nomads because they'll move there, earn all of their income abroad, and they don't have to pay any tax in Costa Rica legally. So we're not advocating to kind of skirt some rules or do something illegal here. You just you take advantage of the laws in the jurisdiction where you want to spend time. And this is one of the advantages. However, as I can read the tone from the comment, this is a common theme. People say, oh, you're not paying taxes in the local economy, you're not helping out. That's actually completely false because most every country in the world has a national sales tax or a VAT. You do spend a lot of money there, you're renting higher cost of living places there, and you do dramatically contribute to the local economy. In a lot of cases, especially in lower cost of living countries, you're spending multiples of what locals may spend. So you are actually helping the local economy tremendously.
Daniel Colonna has some questions regarding your recent video about using a Wyoming LLC to own properties in any state, namely that it does not skirt income or property taxes. So he's not sure what the point is.
Right. So he was making some false assumptions there. So we'll make an example. Let's say you buy an apartment building in Georgia and you for a Wyoming LLC to own that property in Georgia. Okay, you're not skirting state income tax because an LLC, whether it's in Georgia or Wyoming, is a pass-through. It passes the profits or losses if you lose money, but the profit or losses pass through to you, the member or the owner of the LLC. So wherever you personally live is where you're going to have your personal tax obligation. You could even say you buy a property in Georgia, an apartment building, you buy it through a Wyoming LLC's name, but maybe you live in North Carolina, for example. You would still pay your personal local income taxes, your state income taxes in North Carolina. So you're not skirting any state income tax rules there. It's a pass-through anyway. As far as property tax, that's impossible to skirt property tax because property tax is tied to the physical property. You always have to pay property tax in the municipality where your property is physically located. So I wasn't advocating, I think maybe the reader or the listener, viewer, whatever, I think he was maybe making some assumptions that we were advocating avoiding some type of taxes on that property. But none of that's really possible when you register an LLC and buy a property in that LLC's name. The benefit of having the property in an LLC is, number one, asset protection. If you get sued personally, for example, you get sued for whatever, your assets are held in an LLC, so you keep them separate from, your personal assets. So you have a disconnect. The assets held in the LLC are protected from any personal liabilities in that case. It's also there to protect you from any inside creditor liabilities. For example, you have that apartment building in Georgia owned by a Wyoming LLC, and something happens in the building. I don't know, somebody gets hurt or gets killed in the building. They're going to sue the owner of the building, and they're going to sue the LLC. So it minimizes your liability risk to whatever is inside that LLC. And in this case, that LLC owns one building, and you mitigate your risk by, keeping it down to that one asset. So that's a huge thing, is the asset protection. In my opinion, you're crazy to own real estate in your own name. There's way too many potential risks with tenants that you could end up in a pretty serious liability situation. So you always want to keep assets like real estate and other assets too, but you always want to keep assets separate, out of your own personal name. And we've discussed that in several other videos. And then there's also the privacy aspect, so that you're not putting your name in public record for everything you own. It's never a good idea to have your name in public record to own your personal assets, because back to the lawsuit situation, if you ever get sued, it's quite easy for your claimant's attorney to do a public record search and find out everything you own if it's all in your name. If everything is in an LLC's name and he doesn't know the LLC, then it's going to be much more difficult. And even if maybe he does think he knows that you have an LLC, if we register the LLC correctly, like for example in Wyoming, and we do it in the proper way, then your name is actually not even attached to the LLC. So there's a ton of benefits, mainly regarding asset protection and privacy for owning property in a Wyoming LLC.
That was awesome. Do you want to say thanks for the comment, Daniel?
Thanks for the comment, Daniel. Are you going to cut that in there where you actually said, do you want to say thanks for the comment, Daniel? You tell your kids, like, listen, little Johnny, do you want to tell Aunt Mary thank you for the cookies? Don't you want to tell Aunt Mary thank you?
Exactly.
Does LLC liability protection work in different states other than where it was formed?
Yeah, I can answer that question. Thanks for your question, Davian. Yeah, basically, if you register an LLC, and for example, I think this was on a real estate comment, but if you are registering an LLC, we'll continue to use Wyoming. You register an LLC in Wyoming to go buy rental houses in South Carolina, you would automatically have the same asset protection with that Wyoming LLC. No different, really. There's slight differences due to statute differences between Wyoming and South Carolina, but essentially there would be no difference in your asset protection whether you registered a South Carolina or a Wyoming LLC. Now, there are some advantages to registering that LLC in Wyoming to own property. For example, Wyoming has very clear statutes that offer the same protection for single-member LLCs as they offer to multi-member LLCs, whereas most states don't offer the same protections for single-member LLCs. So, for example, if you bought an apartment building in South Carolina in a Wyoming LLC's name and it's a single-member LLC, you have better asset protection than if you registered that LLC in South Carolina because of Wyoming statutes. Now, I think your next question was about qualifying in different states to do business. So this is an interesting question because, yes, you can register. Take that Wyoming LLC, for example, you can register it to do business in South Carolina as a foreign entity. So that's what it's called, registering to do business in South Carolina as a foreign entity. You can do that, but in the case of owning assets, it's unnecessary because you don't need to register it in South Carolina just to buy property in South Carolina, because you would only need to register it in that other state like South Carolina if you were conducting like actual business, meaning you had an office, you had employees, you were doing an operating business and that type of thing. But if it's just for owning assets, like a piece of real estate or other assets, that sort of thing, there's no need to register in that other state to transact business as a foreign entity. It's unnecessary. This is a confusing thing, and I've had this debate with some other real estate attorneys, but typically they are more locally focused and they don't understand, the difference between registering entities in foreign, or not foreign, but other states for owning assets in that home state. For example, if you go to your local South Carolina attorney, he's probably going to recommend to register a South Carolina LLC because your property's in South Carolina. They typically do that because they don't really know you can do it in another state and they don't actually see any advantage. Also, they have an incentive for you to register it in South Carolina because then they can serve as your registered agent in South Carolina using their office address, and they can continue to charge you fees every year to maintain that LLC. So this is typically why they recommend you to register in that home state, because they have advantages for doing so.
Do you need an operating business to create an LLC? I want to protect my brokerage accounts, but I thought I needed a business to create an LLC.
Sure. Yeah, this is not a YouTube comment, but I did get an email yesterday from a viewer. He said he watched several of our YouTube videos, and so he emailed his comment in, and he told me he wanted to protect his brokerage accounts and other investment account assets, and wasn't sure if it was possible to put them in an LLC because he thought you needed to have an operating business to register an LLC. So short and sweet, no, you do not. LLCs are very frequently used for no other purpose than to own assets. You can own real estate. You can actually open a brokerage account in your LLC's name. You can do it for all types of other assets. If you're doing hard money loans, you can use an LLC to make loans. You can do other types of trading. You can own crypto, all types of things. But you do not have to have an operating business in order to register an LLC. It is a very good tool for protecting the assets, though.
For non-U.S. people who register an LLC in the U.S., would I have to pay tax? Why or why not?
Yeah, this is a good one, and this is something I get very frequently because we do get a lot of non-U.S. clients looking to register LLCs in the U.S. So this is maybe requires a bit more detail where we'd have to potentially need to have a consultation with the individual to basically go through the specific needs of their business. But I'll kind of cover the generalities here. If you are a non-U.S. person, let's say a German, for example, and you want to register an LLC in the U.S., let's say Wyoming or Delaware or Florida or wherever, you may or may not have a tax obligation for the operation of that business in the U.S., and it depends on the way the business functions, what it does, and that sort of thing. So an LLC, the default tax status of an LLC is pass-through. So that means the entity itself does not have a tax obligation anyway. Any of the profits and loss for that LLC, let's say that Wyoming LLC, would pass through to that German owner. However, due to the nature of the business, the German owner may or may not have a tax obligation on the income he received from that Wyoming LLC. In general terms, if there is not nexus in the United States for that entity, meaning you don't have an office, you don't have employees where you're withholding payroll tax, you don't have a warehouse, that sort of thing, you're not going to have what's called ECI, or effectively connected income. So that means income effectively connected to the jurisdiction where the entity is created. So in the U.S., you would have ECI. Let's say you were doing e-commerce and you had your own warehouse and you had a couple of employees that ran that warehouse. Well, then your business would have ECI, and the profits from that Wyoming LLC would pass through to you, and you personally would have a tax obligation on the income you earned from that business. But it would be a personal tax obligation in the U.S. because of your effectively connected income to the United States. However, if you were, let's say, had some type of digital product or a SaaS product or a software product, or you're doing consulting or coaching or these types of things where you're not physically performing your job, your work inside the U.S., you don't have an office in the U.S., you don't have employees where you're withholding payroll tax on, then you don't have ECI in the U.S. You don't have effectively connected income. That profit passes through to you, as the German owner. That profit passes through to you personally, and because you don't have Nexus or ECI or your business doesn't have Nexus and you don't have effectively connected income to the United States, and you have no tax obligation. Now, you do have 2 tax forms you need to file, but they're informational forms where you're essentially informing the IRS that company, that entity, is more than 25% owned by a foreign owner. So you do have to file an informational return, but it's a pretty simple, straightforward form that you can file once a year by April 15th. You can even fax it into the IRS. But it's a super simple form that you file. It doesn't constitute a tax obligation. You're just informing the IRS who earned that money and where it went. And that's it. So it's pretty straightforward if you don't have a physical connection to the jurisdiction. You basically have no tax obligation, but you do have a tax filing requirement. I hope that makes sense.
Well, that's awesome. Do you have any final topics that you want to hit, or is it ready for you to hit the beach?
No, I think that's good. I'm not hitting the beach. I'm going to literally hit the couch and listen to an audiobook.
Oh, hell yeah.